Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in New York City, we have Patrick Gadson. He's partner with Shareholder, Activism, and Mergers and Acquisitions over at Vinson Elkins. We're going to take a look at the M&A environment and something known as Bumpitrage. Patrick, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
Yep, great to see you again. Give us a high-level overview of the M&A space right now.
So I think everyone who's paying their mortgages based on doing deals can tell you it's not a great market. It's not as strong as we'd like it to be. A lot of that, it has to do with financing, right? And when you're in an interest rate increasing environment, and then you also are in a very generationally strong inflationary environment, financing can be a problem. So even if we've seen a lot of naders in stocks and equities across not only the domestic market but internationally, if you can't necessarily get the leverage to buy the thing, it can be tough. So we're hoping that we turn a corner with respect to sort of macro optimism, and maybe even potentially not get any more interest rate hikes. That'd be great too.
Right.
And then we'd see sort of a more sound rebound, hopefully.
Right. Well, of course, cost of capital is more expensive, and then everyone's rethinking valuations and what that looks like as compared to 2021 and 2022. Yeah. So I would imagine that makes your job a little bit more challenging.
It does. It does. In the activism world, it can be very challenging, especially for activists, because as we'll talk about a little bit later, if you want to see a premium increased, but it's difficult because of the financing environment, what do you ask for next, right? So it can be tough. Yeah.
Tell us what Bumpitrage is.
So Bumpitrage is an activism term of art, one of those geeky activism words that basically means after a deal is announced, you as an activist enter into a stock, usually the target of the deal, and you say, you know what, we think the premium that has been offered as consideration in connection with the transaction is too low. We think it should be higher. We think you should reevaluate. Sometimes that can mean all the way out and opposing the deal, right? Filing your own proxy statement saying, hey, shareholders don't vote for this thing, it's a bad deal. But usually it means a lot of constructive engagement behind the scenes in which you cajole, persuade, and or maybe strong arm or threaten a management team and a board of directors to go back to the table, try to push for negotiate a higher premium, and if they don't, you will contest it publicly and or run a proxy fight for board seats. So that usually is how Bumpitrage goes. You're just trying to bump up that premium, usually meaningfully higher than it has been announced in terms of in connection with a contest or a deal, excuse me.
So how do companies prepare for this?
Well, it's tough. So the first thing you need to do is evaluate your shareholder base before the deal, right? While you're negotiating everything, to see if there's anyone that's already there who has a history of being, we'll say, a deal irritant. And then you can have your arms around, okay, after we announce, we're going to have a very deep level of shareholder engagement because there's potential here for this particular actor in our shareholder base to publicly probably cause some problems here. So you want to sort of deeply intensify what you thought would be your IR platform for that particular transaction, and know going into it that it may be contested by either an activist publicly or behind the scenes you have to work through it. The next thing you have to think about is, okay, so we don't have anybody currently in our stock, but is there someone who's always been poking around or recently been poking around our industry? And then you have to think about, have they had a history of Bumpitrage, right? And if they have, you have to assume if they've been poking around and kicking the tires around your industry that they will be a factor, right? And it doesn't necessarily cause companies to maybe leave a little bit of head on the beer in anticipation that they might have to, push things a little bit further. But it definitely helps shepherd people to get best and highest price, right? To know that if there's any meat left on the bone, you could be in a real problem publicly with an activist.
So what do you do as an attorney? Are you working with the management teams? Are you negotiating with the other lawyers on the activist side? What does that role look like?
So we're usually in negotiations with the other activism council, right? So there are a few really strong, complete, only activist side firms that we usually see in those circumstances. and then we're trying to figure out a way to constructively reach a resolution. Usually it's walking the activist through how the pricing came to be, right? So it fully understands, probably even maybe before there may be some disclosure around it. You get them under NDA. They've said they want to know more before the S4 hits and they can really see the detail. And you try to have them understand that this really is a good deal. It'd be a shame if someone like you came and blew it up. And if you do, you're now married to blowing up a deal for a company that if later on, a few quarters down the road, the stock price is lower than that premium that was asked on a full basis, and then now you're the reason for that. And do you really want to be the person that everyone points to and said, you know what, there was that great deal a year and a half ago that we should have had the company accept that was far higher in terms of its valuation than the current stock price, but we said no because the activist caused a lot of hay about it, right? So you want to remind them that they would ultimately be on the hook if things go awry, if the deal falls through because of them. Now the performance of the company, they're kind of married to that in the future as well.
Sounds like a lot of Jedi mind tricks.
It is.
Like,
you have to
you
think
can only
about it a lot.
imagine what your day is like.
You have to think about it a lot. No, it's fun.
Yeah, no, it does sound really interesting. What's the SPAC environment look like now?
So we obviously hit like peak SPAC fury and fervor a few years ago. And now, for many of the de-SPACed companies, it's not looking so great, right? So many of the de-SPACed companies that we saw clear, a lot of electric vehicles, batteries, high tech, very growthy, very large terminal value type companies, because we were really in I wouldn't say a speculative bubble, but it was a lot. There was a lot of optimism about the space. A lot of that optimism has sort of been let out of the balloon, and now you're dealing with companies who pre-de-SPACing were already facing some redemptions, right? So they didn't come into the de-SPACed world with a full balance sheet of ammunition, right? They weren't really strong from that perspective. And now they're in a public company world, and many of the members of management for those de-SPACed companies, many of the board members for those de-SPACed companies are used to private company worlds where they have a very different rule set. And some of these companies de-SPACed very quickly, so their corporate governance may be eyebrow raising. We've seen de-SPACed companies that went through the process apparently so quickly, they still had placeholders in their governance documents upon filing. So they still had like bullets for, we'll replace later, we'll fill in. And I'm thinking, when you see that kind of stuff, you're like, well, this was done really fast. And whenever things are done pretty quickly, it's very difficult to move fast and not break anything, especially from a governance perspective. Mm-hmm. And that's what we've seen in terms of potential activism in this space. Prior to the end of the SPAC, we'll call it like bubble, advisors in our space, in the activism space, we were all talking about, this is probably going to end poorly. There's going to be a lot of activism that comes out of this because you're dealing with companies that don't necessarily have best-in-class corporate governance, that don't have boards or members of management that have a deep level of experience in the public markets. And so if valuations, implode a little bit, which we thought they were probably likely to do because of the fury behind the bubble, then you're going to see a lot of activists dive in and try to see what value they can catalyze by being disruptive. So that's how we saw it, and that's kind of what we're seeing now.
Right. Well, I mean, you have listing standards as well, right? That you have to comply with, and
they're not used to that.
Well, right, and then if you have to kind of figure out, all right, well, where do I trade? And you only have, a week or two to figure that out.
What do you mean the audit committee can't just be the CFO, and the CEO, and VP? I can't be the audit committee? No, it doesn't work that way.
Well, it is an interesting world in which you live in, Patrick. Thank you so much for the insight, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.